Okay, perfect. So we're going to be speaking about trading psychology, mainly the things that affect you in the market and outside of the market when it comes to the psychology. And those are the things that I actually made research on, and as well from my experience of trading, these are the things that used to affect me when it comes to the way that I think towards the market or the way that I behave towards the market. So the first thing on my list, I got 6 things on my list over here as we are looking. The first thing on my list is actually creating a trading plan. It's very important for you to create a trading plan, because why? A trading plan allows you to move according to a certain foundation that you even know which pairs you're specifically mainly focusing on, which is number 1. Creating a watch list is very much important. Hopping on the market on a daily basis and just deciding that you're going to trade this pair and this pair or this pair is very dangerous, because why? You're not going to be able to build a relationship with the pairs that you look at on a daily basis. So if you decide to select them, you can you're going to find it a little bit easier for you to do even research based on the pairs that you trade in the market. Okay. Secondly, the thing that needs to be included in the trading plan is the time frames and how you're going to break it down. So how you're going to break it down, as you guys have been taught for the past 2 hours, that we break it down from a bigger time frame, looking at the main levels, coming down onto the smaller time frames, looking for retest levels, and also the structure of the market, and also how we break it down. Okay, so I hope you guys are aware of that fully and completely. Okay, secondly, you need to have a trading journal, right? I'm just gonna mute. I told you guys, if there's noise in the background, please mute yourself, because it is affecting this as it's being recorded. Secondly, I need you guys to create a trading journal. So people don't know how exactly they're going to create a trading journal and what is the purpose of a trading journal. There's 2 ways for you to actually create a trading journal, which is either you can create a trading journal by using a spreadsheet, which you are going to be ticking X and obviously the tick and the X to show you the probability according to the amount of trades that you decided to take according to an amount of time. Okay, just hold on. I'm just going to mute everyone. Let me just mute everyone. Okay, perfect. So with a spreadsheet, with a tick and a cross, it becomes a little bit more easier for you to understand that, okay, I'm going to give myself a period of 3 months, which is 90 days. That's usually the time that you take to understand the market fully, if you're putting in the attention and the time the way that you're supposed to. So with the tick and the X, if you find more ticks or more X's in a pair, it means that the way that pair actually moves according to how you trade in the market, with the structure that you're trading with the kind of way that you trade, it doesn't work accordingly. And then you're able to select or take out the pairs that you are not supposed to be focused on, and you can look at the one with more ticks and you can actually focus on those ones. That means they will give you a higher probability of you winning. Does it make sense to you guys? And also, a trading journal can be made with writings. So you can write down how you're approaching the market, how you're planning to approach the market for this week or for this month, because a trading plan can be changed as time goes on. With that way, it's easier for you to understand or look back at the trades that you actually took and see how they played out, so that it can become a little bit more easier for you to understand or see the mistakes that you actually made on the market. So you basically taking yourself through the path by yourself without anyone looking at you, right? So you managing your own trades, understanding, okay, I went into this trade kicked me out of the stop loss, and it decided to go towards my direction simply because I had a too tight stop loss, or I didn't put my stop loss at the previous high or the previous low. And then next time the same situation occur, you're able to do what? To handle it a little bit better. So that is step number 2. Step number 1 is the trading plan. Please don't forget, write down a note. Under the trading plan, we have what we call a watch list. I can send you a screenshot of my watch list. Specifically the pairs that I decide to mainly focus on and build a relationship with them to understand the dynamics of how this pairs move and what mainly affects them. Number 2 is the trading journal, which is taking down either in note or on a spreadsheet trades that you're taking so that you can look back and see the mistakes that you make on those trades so you can come out a little bit more better, or you can see that it's now time to pull yourself out of a certain pair and maybe find another major or minor pair. Number 3, which is the risk management part. You need to be able how to calculate what we call pips in the market, which is the smallest movements, right? I need you guys to open the link that I'm going to send you guys when it comes to pips. It will be able to help you in positioning, lot size positioning. So if you know how to calculate the amount of pips that you're deciding to take in the market or that you're deciding to risk, it can become a little bit easier for you to know which lot size that you're supposed to use according towards those same number of pips, so you can only risk a certain percentage of your trading account and not your whole trading account. The more you use reasonable lot sizes is the more that you're going to be able to handle your emotions in the market, because you know, even though the market does not play out in a way that you actually expected it, you're still going to have a huge amount or huge percentage of your trading account still available for you to recover from the losses that you actually had. So if you see yourself always opening trades and panicking, going checking the trades each and every 2 minutes, it's because you did not use the proper lot sizes that you were supposed to use, and that actually makes you panic a lot. Close trades before they actually reach your target point. It can be either your stop loss or your take profit areas. So in order for you to gain full control of your emotions, everybody has control in the market. You cannot be emotionless in the market. I don't care, you're an experienced trader, you've been trading for 10, 15 years, you're still going to have emotions. The only difference between experienced traders and a lot of people that get kicked out of the market because of emotions is that we know the best way on how to handle our emotions, whether it can come to wins and it can come to losses, because wins can also be part of the cycle that you're going through, actually building an account to a certain percentage and then dropping it all from that percentage all the way down to the same percentage that you started with. It's simply because you become overconfident when you win in a row. That's something that you should be aware of. So if you start winning in a row, then you start breaking your rules. You start opening too huge positions in the market to a point where you lose all the profits that you accumulated from the startup amount that you started with to the amount that you actually pushed it to. So it's very important for you to handle your emotions. It can either come in sadness and also excitement. Perfect. Okay. Number 4, which is very important that I want us to take on. So this is the one that affects people mostly, is social media. The influence on social media. The influence on social media is ruining everybody. What I see these days on social media, I spend my time looking at social media, just trying to see how everything is changing according to different traders that we get to meet alongside the way, and as well everybody that pops up on social media now claiming that they can flip accounts continuously. It's what affects us. You end up looking at social media, people are opening multiple trades on the same currency or at the same time. That account has turned into 2,000 rands all the way up to 50,000 rands in a day or in a week and whatsoever. And then you end up forgetting what is your purpose on the market. I've been trading for more than 4 years now. I know exactly what I'm telling you about when I say stay away from all those clowns that you guys are seeing on social media. Understand that trading is about percentage. Trading is about risk, and you need to be able how to handle that perfectly fine. If you stay away from everybody that's flipping and everybody that's doing what, you will be able to limit your positions in the market and see how the market plays out, see how your trades play out without having any pressure from anyone, basically. Okay, so pressure can come in both ways on social media. Either the things that you guys decide to watch, everybody flipping accounts, and still coming back and saying risk management, risk management, that risk management, this. You cannot do a risk management if you decide to open 1 million trades on one pair. If you don't know what you're doing, please stay away from that. Okay, so the second pressure can come from posting all the trades that you decide to take. You're gonna post the trade, you're gonna let everybody know around you or in your family that you're involved in the Forex market, to a point where everybody's gonna now start to have expectations towards you. It's gonna give you so much pressure, you're gonna lose your focus in the market, because you're gonna be mainly focused with keeping up the standard that you promised your family or the people on your social media or everybody that you follow. You're only allowed to to let people know that you're involved in the Forex market or you're placing trades unless you know what you're doing and you've been consistent throughout your backtesting stage, so that you don't get pressure from anyone. Number 2, social media can cause confusion. If you go every day on social media, look at everyone's post, look at how they're doing, look at how they're flipping accounts, look at the type of strategies they're using, you will not be able to stick to one strategy, which you will be able to find the mistakes on those strategies or that specific strategy you're trading, so you can simply adjust a couple of things and you can become better at it. So stay away at looking at how everyone trades, and trade the way that you know is the way that you've been taught since you came to me as an institution. Okay, social media also forces you to start breaking your rules. You promise yourself that you're going to only trade 5% of your trading account, or even 1% or 2% of your trading account, to a point where you start looking at everybody flipping accounts, and then you start risking over 50% of your trading account, only to find that you take account from 1,000 rands to 10,000 rands, only to find that you're going to come back all the way to actually zero. So be aware, guys. Be aware of this kind of influences. It's a very deep psychological point. People don't look at it, and people are only going to realize this type of things after a while that they've been going in circles and circles. Okay, so social media pressure, confusion forces you to break rules. Okay. Number 5, the importance of opening one trade at a time. When you're opening one trade at a time, you allow yourself to reduce the risk that you're putting on that specific pair that you're looking at. And let me explain to you guys how a lot of people can get confused. You opening 10 trades with the same lot size on the same pair doesn't mean you're risking the same percentage. You're basically, let's say for example, you say you're going to risk 5% of your trading account on this pair, and you decide to open 2 lot sizes with the same on the same pair. That means you're not going to be risking that same percentage. You're going to be risking 2 times of what you were supposed to risk, and that's going to make you, or that's going to actually force you to do what? A couple of mistakes in the market. If you lose one trade, you find out that you lost about 30% of your trading account. That's obviously going to have a big shift on your trading psychology, and that might actually be the reason of why you guys are blowing over and over again. So number 6, allow yourself to go through the backtesting stage. It's very important for you to take yourself into three trading stages when it comes to the market. So there's what we call the learning stage, which is when you're applying, not actually when you're applying, when you learning about this trading strategy that you are going to be using. It can either come to the structure of the market or the patterns, whatever that you've been taught. That's the learning part, making sure that you understand it fully, making sure that you're taking down the notes of everything that I'm showing you guys into the next step, which we call the backtesting stage. So this is what happens. I usually advise my students to find their first account, which they don't care about is the account that we actually backtest with. The reason of why I'm saying you should be backtesting with an account with money in it is to see if you can get a grip, or you can have a control over the emotions that you have in the market. That becomes a little bit easier for you to see if you can handle the emotions in the market, to allow yourself to make mistakes such as closing a trade too quickly or putting your stop loss too tight, moving your stop losses from the areas that they were supposed to be because you were scared that the market is going to kick you out with a higher percentage. So what I'm going to give you guys, I need you guys to take this time. I need you guys, if you guys want to take this as serious as possible. I don't think from all of you guys that's on the Zoom meeting that you don't want to take trading as something that's going to give you a huge amount of capital, or it's going to actually change your life, or even fund the dreams, the businesses that you're actually dreaming about. So what I need you guys to do, I need you guys to give yourself 90 days from today, or you can start it from Monday. So this 90 days, you are going to be using it for back testing the strategy that you got. It's going to be emotionless. You are going to be expecting nothing from the trading accounts that you're going to be focusing on, because you're going to be funding with an amount that you're not scared to lose, but you promise yourself that someday this back testing, this probability that I'm trying to back test is going to someday pay out on an account that I'm willing to fund in the future from here. So this is what I usually tell people to do, and it works out perfectly fine. Imagine I come to you now and I tell you that XXX trader or fellow trader, I'm looking to give you 100,000 rands to start trading with after 3 months from today. But I'm firstly going to give you 1,000 rands that I want to see the probability of your trading style or your trading experience to see if you're worth the 100,000 rand that I'm willing to give you. So from this 1,000 rand account that I'm giving you, I am not expecting any returns, and you as well, you're not expecting any returns. We're just trying to see or find out what is the probability of your trading style, so we can see the mistake throughout those 3 months. So when I do give you that 100,000 rands, you will be able to trade confidently, emotionless, and with the proper experience. So this is the same example that I always tell myself when I'm back testing a new trading strategy. I find an account with money that I'm willing to lose, money that I don't even care about, believing that in the future or in the next coming few months, there's actually going to be a huge amount of money that I am getting to actually start trading with. So avoid thinking that you're going to flip this 1,000 rand into 10,000 rand. Stop thinking at the results. Stop looking at the monetary part of a trade. Look at if the trade does play out in the way that you actually expected. That 0.01 that you've been so impatient with is gonna be someday a 0.10 or 1 lot size or 10 lot size that you are gonna be using on a certain amount of money you're gonna get in the future. Do you understand how you can actually program your mind to stay less pressured? Does that make sense to everybody? Yeah. Very important. So with the 6 amount of things, I need you guys to practice them. I need you guys to keep it in mind. And there's one thing, a secret that I use in order for me to always be pumped up, or my mind to be pumped up when I go in the market. You can wake up in the morning and hop straight onto your charts, which is not good. You can come from the streets and hop straight onto your charts, which is not good. You can come from watching television and hop on straight onto your charts, which is not good. I have what I call my click button. So it works in a different way. Right. I am more, what can I call it? What can I call it? What actually pumps me up, what actually pumps my mind up is either reading a book or looking at something visually. So before I go on the market, I do have a couple of books I read, like Atomic Habits, the one that I used to post for you guys to see. Do you guys remember it? I used to read at least 2 pages before I hop on the market, because I get my mind used to the fact that it's on a concentration level, and that makes it a little bit easier, and I can work from a higher state, especially when I go into the market. Secondly, I do have a couple of videos that I picked out that motivates me or pumps me up or give me an adrenaline. So this is the videos that I watch before I go in the market. It can take 10 minutes of your time, it can take 5 minutes of your time. It just gets your mind triggered into actually concentrating or focused and away from everything that you've been doing before you got into your office or before you get into your laptop. So you need to be aware of a click button. Find out what type of a person you are. You can either be visually, is when you're looking at a video. You can either be an audio, someone speaking. You can either be you hopping onto a book, just reading 5 lines or 10 lines, pumping your mind up to be ready. So when you do go on the market, you work from a higher state of your mind. Does that make sense to you guys?
Yes.
So everything makes sense. These are the 7 most important things when it comes to psychology. Before we get deeper, you guys are going to be completely swept away by all of these things that I'm telling you guys. It's not only your technical analysis that needs to be applied fully on the market. It's the way that you think, the way that you behave towards the market is very much important. Now, here's the last thing. I need you guys to focus, right? You guys call it forecasting. Alright, okay, so basically, forecasting is you checking or planning ahead of the week that's coming up or the month that's coming up before the market opens without any pressure. Most of people decide to open their laptops on a Monday. When the market is open, that means you're pushed into a corner to a point where you start looking for trading opportunities because you know it's Monday, the market is open, I should be trading. It's very important for you to forecast on a Sunday. Prepare yourself when the market is closed so that you can psychologically prepare yourself and you can deal with the positioning in the market, calculating the risk. If I decide to analyze the market now and I see a good trading opportunity, I'm not going to have that enough time for me to do what? To calculate the type of lot size or the amount of lot size that I actually want to use on the trade. Because why? It's already moving towards the direction that I actually predicted. So it's very important for you to plan your week ahead before the market opens, so you don't have any pressure for you to hop onto the market because the market is already moving at that specific time. Does it make sense to you guys?
Yeah.
So forecasting, it's already Wednesday today. I don't want you guys hopping on the market. I don't want you guys looking for any trading opportunities. Here's the project that I'm giving you guys. I need you guys this Sunday to actually go on the market, write down the pairs that has the highest probability of actually playing out in the way that you expect them. And then you can swipe out all the pairs that you don't need and look specifically at the pairs that has the highest probability. That makes it easier for you to know that on Wednesday or on Tuesday or on what, based on the analysis that you made and how far the market is from your entry point, can make it easier for you to actually manage your time. There's what we call an alert on trading view. For some of you guys that get worried of sometimes the market passing on your entry point without you seeing it, and I know not everybody's comfortable with having orders on the market except market execution. So there's an alert. I'm just gonna go on here. As you guys can see over here, here's my alert. As you guys can see, so this is alerts over here on trading view on the right hand side. You can actually create an alert and do your own modifications on it, or modify it in a way that you want to. It can tell you when the market is at a certain entry point. It can beep either on your phone or on your laptop so that you don't get to miss out the trades and you don't get to sit on the charts the whole day and don't have time to actually do what? Don't have time to spend with your friends and families. But anyway, thank you guys so much. It's been an amazing 3 hours today. I think it's been 4 hours actually that we started from technical analysis. We went all the way through to risking. We went all the way through to understanding how the market can, kick you out, make you hop in. We also went on to psychology. I am thankful that we ticked all the things that we were supposed to focus on when it comes to psychology. If you guys want any recommended books that you can read to pump up your mind, let me know in the group, please. I will let you guys some of the books that I actually read that was able to help me break the bad habits that I had and make it a little bit easier for me to do what? To be a little bit more focused on the market. But anyway, thank you guys for joining the session. See you guys on the other side. We are going to be having our next session when it comes to probably tomorrow morning. I want everyone early in the morning, before you do anything, I want to start you guys with some fire. But anyway, peace, gents. Is everybody satisfied? I'm going to let you know. I'm going to let you know what time it's going to be.
Okay.
Okay.
So we can't ask questions about the points you gave.
Oh, you can ask questions about the points that I gave you, but I'm going to allow, let's say, 3 questions now because we have 5 minutes remaining.
Okay. About your risk management, bro.
Yes. I'm going to send you the
sizes.
I'm going to send you a link that's going to help you how to calculate pips in the market. So that you know, if you have a 10 pip stop loss, for example, you're using a 0.10. A 0.10 means $1 per pip. And you have a 10 pip stop loss, that means it's $10. Obviously, you're going to look at how much is $10 according to your trading account. If it's maybe $1,000, you know, $10 is only 1%, then you're on the good side. So I will be giving you guys those type of things as we go on as well.
Okay. Get just from my side, right? Seeing that I fully must out the second session, right? But it's not a transmission, so you for 3 months.
Yes,
right?
90 days.
So basically, what we're touching on is retest levels, reversal levels,
yes,
market structure,
yes,
right?
Yes.
So we're basically just playing in those. Let's make it four time frames.
Yes.
The monthly, the
yes.
weekly,
yes.
the daily, and your 4 hour.
Yes, that's the ones that I showed you, and as well the 1 hour.
The 1 hour entry.
Yes, for entry points, stop levels, and targets.
It's the 1 hour.
Yeah, that's the 1 hour.
Okay.
Although all of those dynamics, it's a live account, right?
You can do it on a live account.
Money that you don't care about, like you said.
Yeah, you can.
On a live account.
Yeah, $300 or $500. I mean, you can drink the $500 on a weekend. So why are you not willing to use it?
Exactly. Well, every day.
Exactly.
Oh, gents, this has been amazing.
Just another thing you get.
Yeah, sure.
Notice is in the group, guys. Right. Be in a group. So I've seen this guy by the name of, I'm not sure, Jack Dio, asking questions. If there is time where we can find it to assist each other, as you see, Cat has many classes, do we? So if we have time to find each other, because it's simple, we are in one group, so it won't be a transmission, we help each other based on the sessions we've got from it.
Yeah, most definitely. I like the way we're gonna work together, you know.
Yeah, send the brokers too.
Okay, the brokers too. Okay, gents, thank you so much. 20 people in the session. Let's go, baby. Let's go forward.
Thank you.
The session is ending in 2 minutes. Let's kill the markets. Away, gents. Sweet brothers. Away on the other side. Woo! Woo!